Now we are going to discuss functions of commercial banks. Functions of commercial banks can be classified into two. First one, conventional functions, and second one, innovative functions. Conventional functions includes primary functions and secondary functions. Primary functions of banks. Accepting of deposits and lending of money. These are the important primary functions of commercial banks. The commercial banks accept different types of deposits. First type of deposit is fixed deposit, or it is also known as time deposits. Then what are the features of fixed deposits? FD. Fixed deposits are accepted for a fixed period of time. Say for example, for 5 years, or for 10 years, or for 3 years. Okay. Such deposits cannot be withdrawn before the expiry of the period. For example, if a fixed deposit is made for 3 years, we can withdraw this deposit before the expiry of 3 years. But premature withdrawal is allowed if the depositor is ready to forego interest at least partly. So now banks allow premature withdrawal if the depositor is ready to forego interest at least partly. Then the rate of interest on fixed deposit is higher than on any other types of deposits. The banks give higher rate of interest on fixed deposits than any other type of deposits. The rate of interest may vary according to the period of the deposit. Savings deposits. Banks accept savings deposits to encourage and mobilize small savings of the public. Okay. So the primary objective of saving deposit is to encourage and mobilize small savings of the public. Certain restrictions are imposed on the depositors regarding the number of withdrawals and the amount to be withdrawn in a given period. Some restrictions will be there. First restriction may be with regard to the number of withdrawals in a given period. For example, in a month, we can withdraw only 5 times or 10 times. And the second restriction may be with regard to the amount of withdrawal. At a time, we can withdraw rupees 10,000 or 20,000. Such restrictions will be there. Banks usually fix a minimum balance to be kept in the savings deposit accounts. Minimum balance 1,000 rupees or 500 rupees or 2,000 rupees like. The rate of interest paid on these deposits is low as compared to that on fixed deposits. That we already discussed that the rate of interest given to fixed deposit holders is very high. So the rate of interest paid on the savings deposit is very low as compared to that on fixed deposits. Recurring deposits. In recurring deposits, a specific amount is deposited at regular intervals, that is monthly or weekly, for a fixed period of time. For example, a customer deposits 1,000 rupees every month. for a period of 5 years. Okay, every month the depositor deposits rupees 1000. The rate of interest on these deposits is nearly the same as on fixed deposits. The rate of interest will be high and it will be nearly the same as on fixed deposits. On maturity, the amount deposited and the interest accrued on that is repaid to the depositor. Okay, at maturity date, the amount deposited along with interest will be repaid to the depositor. The objective of this account is to encourage regular savings by public, particularly the fixed income group. This is the objective of this account. Home safe deposits. Under this scheme, a small safe is supplied to the depositors to keep it at home and to put his or her small savings in it. A safe is supplied to the depositor. The depositor can keep it in his home itself and he can put his small savings in it periodically. That means after every month or every 3 months, the safe is taken to the bank where the amount available in the safe is credited to his or her accounts. Okay. Current deposits. These deposits are suitable for traders and businessmen who have to make a number of withdrawals from the accounts every day. Businessmen, they have to make a number of withdrawals from the accounts every day. No restrictions are imposed on the number of withdrawals and the amount of withdrawals, as in the case of savings bank accounts. It is also known as demand deposits. No restrictions are there with regard to number of withdrawals in a day, amount of withdrawals, etc. Usually, no interest will be allowed on current deposits. Sometimes, the depositors have to pay a certain incidental charges to the bank for the services rendered by the bank. Loans and advances. A certain part of the deposit accepted by the bank is kept as reserve and the balance is given as loans and advances to the customers. Let's see which are the important types of loans and advances given by banks to customers. First one, term loans. Banks give term loans to traders, industries and agriculturists for a specific period. Okay, so term loans are given for a specific period of time. Loan is granted against some collateral securities. So, this type of loan is granted against the security of collateral securities. Usually, the maturity period for such a loan is more than 1 year, 3 years, 5 years, 10 years, like. The loan amount is credited to the account of the borrower and he can withdraw as per his requirements. Okay, the total amount is credited to the account of the borrower and he can withdraw as per his requirements. But interest will be charged on the whole amount of loan sanctions and not on the amount withdrawn by the borrower. Interest will be charged on the total amount of the loan sanctioned and not on the amount withdrawn by the borrower. Cash credits. The bank allows the borrower to withdraw money from time to time up to a certain amount which is kept under a separate account known as cash credit account. So, A cash credit account will be opened in the name of the borrower and the amount will be deposited or the amount will be credited in the account of the borrower. Loan is granted to the borrower against his current assets such as shares, stocks, bonds, etc. Interest is charged on the amount actually withdrawn from the cash credit account and not on the full amount sanctioned in cash credit account. Interest will be charged on the amount actually withdrawn by the borrower and it is not charged on the total amount sanctioned in the cash credit account. Okay. Overdrafts. Overdraft is a facility given to the current account holders to overdraw from his accounts. So this facility is given only to the current account holders. The account holder can withdraw, overdraw from his current accounts. The borrower has to pay interest on the excess amount withdrawn by him. The amount is repayable within a short period of time and this facility is given to reliable customers only and this facility is given only to reliable customers. They can overdraw from his current account but he has to pay interest on the amount withdrawn from his current account. Discounting bills of exchange. The banker provides financial accommodation by discounting eligible bills of exchange. Okay. The banker charges commission and the balance amount of the bill will be given to the holder of the bill in advance. So in this case, when the customer approaches the bank with an eligible bill, the banker charges a commission and the balance amount of the bill will be given to the holder of the bill in advance. The banker gets the repayment of bill on maturity. Money at call and short notice. Banks also grant money for a very short period of time. If the money is given for one day, then we can call it as money at call. And if it is given for 1 to 14 years or 15 years, then we can call it as short notice. And money at call and short notice, such loans are granted to other banks or financial institutions or brokers in stock exchange to meet their short-term financial requirements. Investing funds. Another important function of a banker is to invest its surplus funds in government securities, shares and debentures. The bank gets dividends on the investor shares or interest from government securities and debentures. Okay, so investing funds is another important function of banks. Thank you.